Hello and welcome to this weekend market analysis for the 12th to the 16th of June 2017. I do not want to waste your time in this market analysis, so we will just go straight to the point and look at what was left for us after that UK general election. Okay, but first let's look into the Forex economical calendar for those high impact news announcements, those monetary policy statements that are scheduled for this upcoming trading week. Alright, as you can see from my chart, we have quite a lot scheduled for this week. There are so many high impact news events that are scheduled from Tuesday to Friday. We don't have anything on Monday, so Monday is quite a free trading day. You don't need to bother about any news announcement for Monday. But for Tuesday to Friday, we have quite a lot happening that will be released. All right, a lot of economic events that will be released into the forex market. So Tuesday right here, okay, ours are okay. My drawing there went for Wednesday, so for Tuesday to Friday we have all of these high impact news events that will be pumped into the market. Okay, so you want to be absolutely careful trading the markets from Tuesday to Friday, and especially on the news release hours. Any news event can actually invalidate your trading setup based on the trading strategy that you are trading. So you want to block out these periods and make sure you are not trapped within that news announcement. Long-term traders should be careful with monetary policy statements, interest rates announcements, especially like the FOMC is scheduled for Wednesday. We will be having the Federal Open Market Committee sitting, so you want to be careful trading all American dollar crosses within this news release hour. I am sure Hector will be trading the market live in this FOMC on Wednesday, so we will be there in the market following the charts. Again, another high impact news event that could move even the long-term chart is the unemployment rate. All right, employment change and unemployment rate. These are heavy duty news announcements that you want to be careful trading on Thursday. All Australian dollar crosses. All right, we also have monetary policy statement from the Swiss franc that will also be released, followed by a press conference, and also interest rate for the sterling pound. So you can see that right there. You want to also be careful trading all sterling pounds crosses on Thursday. Okay, so finally, the monetary policy statement for the Japanese yen. This is tentative, so you don't need to really worry about that, but be careful on Friday with all Japanese yen crosses. At any rate, as full-time traders, we need to be bothered. All right, we'll be worried about all of these high impact news events that are scheduled for this trading week. Absolutely, this is going to be a very busy trading week with all of these news events that are scheduled. So you want to be very strategic with your trading systems, because once market is very active, you tend to get plenty of trading opportunities in the charts. All right, so just be alive in the market, waiting for price to give you that valid trading opportunity. Okay, there are so many of them, and I am actually very excited for this week with all of these heavy news announcements that are scheduled for the week. All right, without wasting much time here, let's look into the charts and see what we have waiting for us. Okay, first thing first, the euro against the American dollar. This is the weekly time frame. We have actually over analyzed this chart. Price has been in a sideways channel, swinging up and down, not taking to any direction for the past 3 weeks. Price has remained in one position, 3 whole weeks, 1, 2, 3. Price has remained in that area. This is a very difficult point to analyze the market in the long term. Price is obviously heading to hit this key level of channel resistance that we have in there, but then we are seeing some hesitation at that junction of the chart. So let's see the daily time frame to see what we have. Daily time frame, the euro against the American dollar, price is hovering, like I told you, for the past 3 weeks. See where price has been. All right, it seems we are having a channel formation. Price tends to be finding resistance there. We might find another line right there, so it's more of a channel. So if price comes back down here, we might see another push to the upside. So if you are trading the euro against the American dollar within this channel, you want to be mindful of this rising level of support, that trend line. Price might find support around in there and push back up. So we are hopefully going to see a channel formation for the euro against the American dollar in the daily time frame. Somewhere in here, price should be pushing to the upside. Let's see the intraday time frame, the 1 hour time frame, to see if we have anything right here. Well, the 1 hour time frame is one of those ugly charts. You can also see the candles, wicks. You can see those long wicks. All right, this is a sign of price on instability. Price are very wicked volatility. You can see those long wicks up and down. This is not a good market condition. In the 1 hour time frame, there is absolutely nothing to trade here. There is no valid setup based on our trading strategies. Okay. All right, let's move into the next pair, the euro against the Canadian dollar. This is the weekly time frame. Price is finding some hesitation around that key level of resistance, that obvious swing point. You can see how price has been giving some hesitation for the past 1, 2, 3, 4, 5, 6 weeks. Price has been sideways at that level. This is a very difficult market conditions for traders when price is not moving at all. All right, price has remained sideways for the past 6 weeks. Well, that is a level of resistance. We are waiting to see if we find a better reaction, either a pin bar of that point for price to come back down, or we get a breakout of that level of resistance for us to look for continuation moves. At any rate, the euro against the Canadian dollar is in a sideways bias, and we cannot trade anything off that time frame. Okay. All right, let's take a brief look into the daily time frame to see what we have. Well, you can obviously see that range that I was talking about for the past 6 weeks, and it seems we are having a channel as well. Price tend to be channeling these days a lot. We can see how price has been swinging up and down, so we might find support around that point for price to push back up again. So the euro against the Canadian dollar again, more of a channel. All right, very difficult price condition, market condition to trade, but at any rate, if you are a channel trader, so you want to just draw your channel line. All right, just draw your channel line, be more specific with your lines. So you want to wait somewhere in here and look for long opportunities. We don't trade channels. All right, these are very ugly price patterns, so we don't trade them because they are really not significant. They are not reliable. We only trade channels in the trending markets. For instance, if we have a 3 SMA, a valid 3 SMA setup, and we have that retracement channel, that is where we trade channels. All right, for now, this is happening just at that level of resistance, and there is no hint yet to take any valid trade. This is a market hesitation, so we are going to wait for a clear hint before we want to trade. Okay. All right, now let's look into the next pair, the Swiss franc against the Japanese yen. This is the weekly time frame. Price has been hovering around that key level of resistance. You can see again 1, 2, 3, 4, 5, about 5 weeks of in a whole. Price has remained sideways. All right, remember we got that hesitation somewhere here as well before we saw price cruising to the downside. That same hesitation has been happening recently. Obviously, these are very difficult market conditions. Once price hesitate, it is difficult to trade. You want to be watching price of this level. If we find price either giving us a breakout or a bounce, all right, so that is what you want to keep an eye on, waiting to see what reaction we get of that level. If you see the daily time frame, you will see that we are having a range. We have analyzed this before. It is more of a flat top triangle. Okay, a flat top triangle. So we need to wait for price to break out of this triangle before we want to start searching for trading opportunities, and that could take several days. That means you have to be patient. Patience is everything. Wait for price to break out of this congested area before you want to keep searching for trading opportunities. Okay. All right, let's move into the next pair, the Canadian dollar against the Japanese yen. Again, this is a very difficult one. You can see that hesitation within that area. Price has been sideways for several weeks, so price has not been moving at all. That is why the market is really hectic, very difficult to trade. In the daily time frame, we have a flat bottom triangle. This is one reliable pattern. You can see how price has been swinging up and down. So we should be waiting for price to break out of this triangle, and the preferable direction should be to the downside. If we find price breaking to the downside in heavy momentum, that should offer a valid trading opportunity, because we are trading in the direction of this original push. Okay, so the momentum should be more to the downside if we get a valid breakout to the downside. If price breaks to the upside, it becomes very difficult to trade. Our trading strategy does not recommend trading to the upside. We don't trade breakouts to the upside, we trade breakouts to the downside. All right, that is because the level of resistance here is not really precise, because we might get a breakout pullback here, and this level might be acting as resistance, or this one in here might also act as resistance. But once you get a breakout to the downside, you know that you have broken free from all levels of support, so you will be cruising on a highway free of traffic. Okay. All right, enough of that explanation. There is nothing much there. We need price to break out of that triangle. The next one is the euro against Japanese yen. This is the sister pair to the Swiss franc against Japanese yen. Price is still hesitating around that area of resistance. That is the high tension level, as we analyzed previously. What I will want to see is a push to the upside. I want to see a significant failure of that area for me to look for my short opportunities to the downside. This is a channel formation. You can see already that price is finding some tough time around that area. So if I get a bounce off that point, somewhere in there, I will be looking for short entries from that junction of the chart. So as a trader, simply wait at this optimal area, let price come back up, then we might have a reaction for price to keep cruising to the downside. For now, the euro against Japanese yen is still hesitating around that point. Let's see the daily time frame to see what price reaction we are having. Now, this is the daily time frame. Actually, let me take out all of these lines so you can get a clearer picture. That is the hesitation I was talking about. Look at the number of days that price was untradeable, the number of days that price was hesitating. Really, our strategies are not good for price hesitation. We want to see price alive. We want to see price kicking in momentum with valid pullbacks. But in this case, it is quite difficult to trade. So we are going to be following price in the weekly time frame to see if we get any valid bounce of that area of resistance. Hopefully it push that point, then it bounce back down. Okay. All right, let's quickly take the next one, the euro against the sterling pound. This is the weekly time frame. Price is trading around a daily level of resistance. This is quite an optimal area to search for short opportunity. Last week, as the UK election result was released, we saw price really dive across all sterling pounds crosses. For the euro against the sterling pounds, we saw price diving to retest that key level of resistance, in fact an area of resistance, and we got a close, a valid close of a pin bar. This is a valid pin bar. Alright, I am sure this is something that we are looking to trade. Aggressive traders should click on their sell button right there. That is where they want to sell this pair as soon as that candle close. They want to click on sell. Their stop loss somewhere in there. Why conservative traders will be placing their sell stop order few pips below the pin bar itself. Stop loss either aggressive stop loss right there as 5 pips above 50% of that pin bar, or conservative stop loss 5 pips above the top or the high of that pin bar itself. At any rate, this is showing some selling pressure around that level. So for this week, in fact the first 2 days or 3 days, we should be seeing price coming back down for the euro against the sterling pounds. Okay. Alright, so this is a valid setup that we might be looking to trade. Let's move into the next one, the Australian dollar against the Swiss franc. This is the weekly time frame. In our last review, we talked about price breaking free this key level of support, but last week price bounced back up. That means this level of support has been mutilated. Price is just swinging up and down within that level. As a matter of fact, there is no valid entry at that point. If you check the daily time frame, you will see how that hesitation is happening. All right, that congestion around the weekly level of support. This is the line right there. You can see how price is just moving up and down around that line. We do not have any valid fake breakout candle in the weekly time frame, so we are not going long. What you have in there is not a real week track, it's not an inside bar, it's not a bullish engulfing candle, so we are not taking that. At any rate, you might see some ranges. All right, price might come back down again, then you might see some ranges around this key level of our weekly support. For now, there is no entry. We don't have anything valid to trade at that point. Okay. All right, finally, the Australian dollar against Japanese yen. Well, we don't really have anything here. You can see for several weeks, see where price has been. 1, 2, 3, 4, 5, 6, 7, 8, 9. That's 2 months and a week, 2 months and 7 days. Price has remained stagnant in one position. This is a difficult market condition to trade in. At any rate, we believe once these global economic issues have been sorted out one after the other, market conditions will improve for us to begin to trade more profitably. For now, generally, the fact is that markets are really difficult to trade. Okay, there are less trading opportunities. Price is abnormally volatile. We don't have valid high impact tradable patterns, so our trading frequency has been drastically reduced. Okay, but at any rate, I think we are doing the right thing by not taking trades where there are no trading opportunities. Thanks for watching this video. If you have any questions, contributions whatsoever, as usual, please post them in the forum, and we'll be there to discuss them with you. I am still your moderator, Jacob. I am wishing you a profitable trading week ahead. Cheers and bye bye.